Okay, everybody, it's me, Gregory Mannarino, and yet again, I must sit here and tell you, you knew this already, especially after the video I did this morning. I laid out the groundwork for you, but here we sit, you and me, together, I guess to celebrate. Not really, I guess. I don't know. It depends on your perspective, but a new all-time record high today for the S&P 500 and the NASDAQ. The Dow Jones Industrial Average is about 1% off of a new record high, and we will be seeing that soon. Just as all of you know, it's an amazing paradox, the situation that we are in. Realize what drove today really was yet another round of bad economic news. This durable goods order miss that could have been worse. You got to be kidding me. Wait till tomorrow. Tomorrow we're going to get another jobs report, unemployment claims for last week. It's going to be horrendous. And that may be enough, again, to push the stock market even higher. People, the paradox is very simple, and you know this. It's been going on for years. As long as the U.S. economy continues to not just crater, we have an economy that's doing two things. It's cratering and shrinking as a percentage of GDP at a stunning pace. As long as this mechanism remains in place, the stock market's going higher. We have another situation here that we're all aware of. I mean, it's just everywhere. Inflation. It's surging at its fastest pace on record here in the United States. People are getting squeezed from every single angle you can imagine. And yet, it doesn't matter. The stock market continues higher. It's relentless, and I don't think anyone has ever seen anything like this before. Think about it. They shut down the economy. They shut down the global economy, and the stock market still hit record highs. Nothing will stop this as long as the situation remains what it is. Suppressed interest rates from here to eternity. It's not going to stop. Crude oil here, another big gain in crude today. So like over 10% in the last 3 days gain. That is pretty freaking mind-blowing. Weaker dollar, okay, we got that today too. And the Fed's balance sheet, which is by design inflating, and it's not going to stop. Despite all the talk, all the distractions, the look here's, the don't look here, and I don't care again what comes out of their mouth. If tomorrow, like I said recently, or like 5 minutes from now, Jay Powell, the Fed chairperson himself, came knocking on my door, I would, of course, invite it in and offer it some arsenic, hemlock, something along those lines, and told me, well, Greg, tomorrow we're going to start tapering. I wouldn't believe it. I would have to see it for myself. And how we can see that is by watching, again, the debt market, the 10-year yield, and the dollar. I don't care what they say. They lied before about stopping it. They never did. And it's just not going to stop. And that's where the market keeps going higher. The worse the economic news is, the faster our economy contracts. We're contracting every day as a percentage of GDP. It's getting smaller and smaller. As long as that mechanism is in place, the stock market is going to hit heights, like I've said, I don't know, months ago, that people aren't going to believe. It's just a massive distortion. Anyway, so let's look at a few other assets. I already covered the 10-year yield. Now, no, I didn't actually. So the 10-year yield, although it was higher today, to me, right now, it looks like it's about or close to the top of a range, 1.37, I believe, last time I looked at it. So what does that mean? Okay, as long as we don't see that continue to spike, okay, at a rapid pace, we're good. You understand that? So let's keep our eye on that. if we break out of a range to the upside, that's not going to be good for the stock market. In fact, it could be pretty freaking bad. But we're going to keep on top of that. Again, we need the 10-year yield to stay in a range, to stay stable. There is going to be a moment of reckoning, people, and we're going to look for it in the 10-year yield, period, the end. I'll keep you on top of it, I promise. What do I expect to happen? I expect the 10-year yield to drop. All right? It may stay where it is now, may even go a little higher. But I'm also expecting this to drop, and that's going to be, again, stay in a range. And that's going to be good for the stock market, along with the weaker dollar as well, which is terrible for the consumer, as we all know. We found out yesterday, home prices here, new home prices have hit a new record high. Meanwhile, sales have hit a 14-month low. How does that sound to you? Sounds great? Yeah, it's fantastic, isn't it? What a crazy situation we are in. Supply and demand doesn't matter anymore. Nothing matters anymore. It's the most twisted environment, I think, in the history of the world. Gold today fell a little bit. Silver about flat. Cryptocurrencies were under pressure, more so. They started catching a bit. I sincerely wish we'd see a little drop here in crypto, but I also wouldn't mind to see it consolidate here a little bit. Either way, what happens to crypto, whether we get a little pullback or a consolidation period, cryptocurrencies are going not just higher, but much higher. Okay, mark my words. Remember I said that. I'm sure a lot of you will. Anyway, so that's the situation here. Period, people. Period. The end. That's what I'm getting tongue-tied today. I don't know. Kind of crazy stuff. So in summary here, let's just put this thing together. Another record high for the S&P 500 and the NASDAQ. The Dow is not far behind. Are you watching the financial sector here and the energy sector here as crude oil has risen to like 10%, maybe more than that in the last 3 days? They are getting bid higher, people. And you knew that too. You knew it. I told you how this works. When crude goes up, obviously it affects the energy sector in a good way, the financial sector, the investment banks leverage beyond their eyeballs in crude. So you can expect more. I told all of you they won't allow crude to fall. We will see a bombing. We'll see a fire, for which we did. Unrest in the Middle East. Have a look over there right now. And they're gonna make it all seem like, oh, this just happened. It's just by accident. Absolutely not. Whatever unrest you see in the Middle East is created, is engineered by developed nations, by the banks, to allow crude oil to catch a bid, to keep that the petrodollar alive. It's again the most sick, twisted thing in the face of the earth. I mean, the petrodollar. But I think most of you are aware of what that is. Most people walk through time and space not even realizing the importance of the petrodollar to the New World Order, to the dollar, debt-based economic model, the banks, the central banks of the world, the Federal Reserve, none more so. But I would like to believe you understand the mechanism here, the fact that the United States military must, by mandate, protect the oil of OPEC nations, henceforth the petrodollar. It's so twisted. People don't know these things, most people at least, but you do. And that makes me extremely, really happy. All right, people, look, that's really it for today. Keep your eye on these things, especially that 10-year yield. Like I said, if we break out of this range to the upside, it could be a problem. It could be a problem, but I don't foresee that. I believe you're going to continue to see the Fed buying the debt market like there's no tomorrow. In fact, increase asset purchases. There will be no taper. I don't care what comes out of their mouth. So with that said, we know where to look and we know why we're looking there. And then even more important than that, we know how to take advantage of it. And that is seriously the key to this entire thing. You and me are not going to let this mechanism destroy us. It's destroying the world. The United States of America is destroying the world. This corporate agenda, this new merger that we have between corporations and this new American government philosophy, the definition of which is fascism, We're watching our freedoms disappear. Your own body isn't yours anymore. They can do what they want to it, or they're going to tell you to go screw off. You're going to lose your job if you don't get the jab. They're going to raise your insurance premiums if you don't get the jab. Maybe soon you won't be able to shop anywhere, acquire assets, goods. Really sounds like the mark of the beast to me in some kind of way. Anyway, all right, people, look, this guy loves you a lot. Please share the video. Get it out there. See you in the morning.